So now I'm starting to watch because these stocks have had a tremendous drop in price. This financial sector, this whole financial sector. And what do we see? We see that they have sold off dramatically. We've got one lower low here. Let's see, we've got another one here. And we have a potential another one right here. And it looks like I've drawn this little resistance line here. Prices went through it. They dramatically, went up from there. They sold back off. They went below this line again. They went dramatically back up again. They went back up to these levels here, and then they sold off again. And recently now, it looks like they haven't dipped they didn't dip below this price level as deeply as they did back here, but we still have a couple of days here where it's below that resistance level. But I mean, if you're a technician, you might say, well, this could be a reverse head and shoulders pattern. It's a little too early to tell yet, but if the financial sector is starting to perk up a little bit here, this is something that I want. This is an ETF that I'd be very interested in taking a look at and doing some of the strategies that I reveal in Module 11 on. Another potential new sector, believe it or not, is the home builders. I mean, the home builders have just gotten absolutely creamed because of the subprime deal. And the economy in general has been very, very rough on the home builders. This is an ETF, XHB, on the home builders. And I started drawing some of my channels. It kind of broke up through one of these channels, and now I've got this uptrend channel going, but it doesn't appear that it's holding this line here. And that's very significant because when it does not hold a channel line like that and it falls below it, it shows quite a bit of weakness. In addition, the 200-day moving average, it kind of hovered above it a little bit, but now it's fallen below it. Until it moves back up above that 200-day moving average, I may not be interested in even, considering it at this point. But if it goes back and down and tests this $15 level, it might get interesting again. So we try to find some clues. We try to find clues of what the next hot sector is, and by listening very, very carefully to the news. People have mentioned home builders, they've mentioned financial sectors, and a lot of these guys will go on to a newscast like CNBC and not really think too much about the fact that they're kind of showing their hand about which sectors they're interested in buying in. For example, a couple of people today mentioned that Lehman Brothers looked very, very attractive at this $30 level. They have had a tremendous sell-off from 82 all the way down to 30, primarily due to this whole subprime mess that the financials have been involved in lately that have really, really hurt them. The whole Bear Stearns thing that happened about a month or so ago, and now Lehman is getting hit pretty hard. But some people have said that this looks very attractive. Well, I'm not so sure about that. I don't think I'd be interested in buying at these levels. I would like to see some institutional support. Some of the institutional support that I would like to see are some black bars like this one, perhaps. But I'd have to see quite a few more of those to indicate that mutual funds are starting to step into this stock and support this stock. In order for this stock to really start to rise in price and give us a good run up in price, you have to see that institutional support. And the way it shows up on a price chart is simply by these large black bars, which are days in which there was more buying than selling on significant volume. So I would take a look at a stock over a period of 3 or 4 months and just measure the number of black bars there are on up days. I see one significant bar here that was fairly large compared to the days previous. There was one here after this tremendous sell-off. But other than that, I haven't seen anything really unusual. In fact, today there was a huge sell-off in the stock on very large volume. So I'm a little bit concerned about that large volume. Now, if it should pop up back up again and come back down to this level on very light volume, that shows that the selling has pretty much dried up in the stock, and maybe at that point you could take maybe a small position according to the guidelines that I give you in Module 11. So what else do I use to determine where a stock or an index, especially for our monthly income trades, how should you use some of these tools? Well, I've already shown you how I take a look at support and resistance points. And for the most part, I mean, that's pretty much all you're going to need. The Dow Jones Industrial Average here, all I do is, draw little ovals around where the prices have kind of dropped down to and then rallied against them dramatically. I hope you understand that point. I'm not drawing these oval points at a point where prices are consolidating, like around this point. That's not significant to me because even though prices sold off, they didn't sell off significantly. Here they bounced off dramatically. Right here they hit a point and they bounced dramatically higher. Same thing here. It hit a point and it bounced dramatically higher. It hit a point and bounced dramatically higher. It hit a point and bounced dramatically higher. That's what I'm looking for. I'm not looking for just about any point. I'm looking for those points in which the market has hit and there was a significant sell-off afterwards, or it was a point where the market had hit and there was an increase in prices dramatically afterwards. Those are the only points I'm really, really interested in. If we come into more recent action, you can see that there was significant sell-off here, significant sell-off here, significant sell-off here, a breakthrough, significant sell-off here, significant sell-off here, breaking through this prior resistance points, a little bit of a run up here, which was prior resistance a number of times going back. I mean, if I was to consider the fact that a resistance point is more significant based on the number of ovals I've drawn on here, there's 1, 2, 3, 4, 5 at this level right here, which makes it very significant. So when a price does come back up to it, you might say, hey, you know what? It dropped, it sold off here, it sold off here, and it sold off here. It'll probably sell off again. And that's exactly what happened. And that's in a daily review that I did for this day here, which was May 29th. I noticed that there was a significant amount of bearishness because it did hit this resistance point, and the next day, which was May 30th on a Friday, the daily review that I did for that day, I indicated that I was extremely bearish on the market, and I took a put position in the Qs at that point. So you can use support and resistance points as determinants of where prices may go. Again, you can never predict the future price of a market, but you can manage the risk that you're in on a particular trade based on support and resistance points alone. If you learn nothing else about technical analysis, you can live and you can survive and you can thrive in the markets just based on support and resistance points. That's all that you need. Now, I've added a couple of other interesting tools to my arsenal when it comes to technical analysis, and that is channels. I like to use channels.